Leading off our discussion tonight, Gene Sperling, former director of the National Economic Council for Presidents Obama and Clinton. He is who I pray to when I am looking for a solution to American economic issues. And Ron Klain, former senior aide to Vice President Joe Biden and President Obama. He is an advisor of Joe Biden's 2020 presidential campaign now. Gene, you have the floor. I didn't anticipate talking about inverted yield curves this week, but here we are.
Yes, well, I think what we're seeing, Lawrence, is that our biggest fear with with President Trump isn't just economic nationalism. It is economic narcissism. It is this kind of drunk driving type of economic management. Now, when you drive drunk, you don't always get into an accident, but you dramatically increase the chances of something very bad happening. Donald Trump inherited, like he inherited wealth from his dad, he inherited an economy that was solid, that was improving. And what we saw first was a huge tax cut, which we now see was really based on one thing, that it was going to justify this huge increase in the deficit because it was going to have a lasting effect on business investment. We've already seen from Jay Powell to the second quarter results that business investment is slowing. If you take out oil and mining, it's actually been slower than it was in the Obama second term. But what we've also seen is this reckless type of management on the trade side. And this is something where there could have been a smart way to do it. I agree we should be tougher on China. I agree we should take some short-term hits. But this kind of reckless back and forth has now been such an assault to not just the U.S. economy, but the global economy, that now the number one single risk factor in economics in the world is Donald Trump personally. That's why I say economic narcissism, because it is his sense of recklessness and his sense that somehow maybe if he really hurts the China economy or the German economy or the global manufacturing goes down, that that's somehow good for us. It's not. When demand goes down around the world, it hurts our farmers, it hurts our steel makers, it hurts our auto producers, it hurts our economy. So the risk that exists right now in the economy lies in the global economy, and the U.S. economy lies squarely on Donald Trump's reckless, drunk driving approach to economic management.
Ron Klain, we have the famous words of Donald Trump that trade wars are easy to win. No one before Donald Trump has thought that, certainly not in the era of modern economic thought.
Yeah, I mean, an economic policy based on retweets. What could possibly go wrong? Yeah. Look, I mean, I also think, Lawrence, it's worth repeating something you mentioned before about the hollow White House staff. I worked for two brilliant presidents, Bill Clinton and Barack Obama. And as brilliant as they were, and they have like 1 billion IQ points on Donald Trump, there wasn't a single meeting where their thoughts on the economy was improved by having a first-class team around them of people like Gene Sperling. And so now you have a president who's nowhere near Barack Obama and Bill Clinton, trying to manage an economic situation with a team that is nowhere near the kind of team those two presidents had. And that is a frightening combination. Now, Trump has made his whole economy about the stock market, which I think is a mistake for any president. Since he's been president, he tweeted 72 times bragging about the stock market results, 7 times in the past 4 weeks. And, you know, what goes up does go down. And particularly with his reckless approach to trade and other economic issues, the tax cut that was squandered the way it was, you know, we've got a big mess on our hands, and there's no one in the White House who can handle that.
So, Gene, we've already seen 1 quarter of negative economic growth in Germany. If the next quarter is negative, that's officially a recession there. You were just on this point, and this is something that Donald Trump doesn't understand, that Germany is a customer of the United States, a major and important customer of the United States. If their buying power drops, if they're less able to purchase what we have to sell them, that's a problem for us. They are interconnected to us in various supply chains in manufacturing. Parts of a manufacturing process might go from Germany to the United States. That's all affected by this. And Donald Trump has always thought that in his trade war, he can just throw punches at other countries. And when he's throwing the punch, he's never going to hurt his knuckles in the process. And it turns out in trade wars, it is impossible to throw these kinds of punches without doing damage to your own economy.
No, I mean, that's exactly right, Lawrence. I mean, really, it's both ways, right? First, you end up having self-inflicted wounds. How's it going for agriculture exports of the United States, soybean exporters? It's been a disaster. We now have industrial production in manufacturing. His big focus is down 2 quarters. That's a technical recession for industrial production. So, one, you end up hitting yourself in the process. But secondly, instead of working with Germany and Canada and other countries in a coherent way that might have been directed towards isolating China, this kind of just, again, kind of drunk driving approach ends up just creating risk and harm in the global economy. And so not only is it bad when Germany goes to negative growth, but you've seen that China now had industrial production at its lowest in perhaps 17 years. None of that is good. It's not good when you hurt your own agriculture exporters and your own manufacturers. But when you lower demand in the world, in Germany, an important customer, in China, in the global economy, you hurt all of the people in the United States who rely on strong global demand. And, you know, the question now is, can he pull out of it? You know, you asked, what do you have to do? You actually don't need to know too much about economics to know that when you're digging a hole, stop digging. And the way Donald Trump has, again, managed this economy is that he is the #1 risk factor. If he simply did nothing, the entire U.S. and global economy would be in stronger shape than it is now.
Ron, we have a Fox News poll saying unsatisfied with the way things are going, a very general statement. Satisfied is only 40%, unsatisfied is 59%, and that is before the inverted yield curve.
Yeah. Yeah, I mean, I think there's also an inverted approval curve for Donald Trump there, and it's headed in the wrong direction, as it should be. Look, I mean, again, I don't think you can judge a president by the market. Markets are impacted by a lot of factors outside his or her control. But you can judge a president by the policies they pursue on the economy. And what Donald Trump promised was to invest in working people. He promised to have an infrastructure plan. He promised that he'd have a big, beautiful health care plan. He promised a lot of fundamental staples, kitchen table things for working people. And I think people, for better or worse, believed him with those promises. And he's delivered absolutely none of them. He's run the most kleptocratic administration in history and an economic policy that's exacerbated inequality and delivers all of its gains to those at the very top. So it's no surprise, unless you're polling the very top 0.1%, that the number is people are unsatisfied with that. And as you say, that's before today's events. That's going to get worse for him, not better.
Ron Klain, thank you very much for joining us again tonight. And Gene Sperling, economic advisor to presidents, could not do this without you. And as this economic news continues, we're going to need you. Stay by the phone, Gene. We're going to need you a lot if this keeps going in this direction. Really appreciate it. Thanks for checking out our YouTube channel. Subscribe by clicking on the button below for more from The Last Word and the rest of MSNBC.